Capital expenditures is where you can lose your shirt in multifamily investing. The problem is many investors either under budget for repairs, spend on the wrong upgrades, or fail to track return on investment effectively. This can lead to cash flow issues, missed opportunities, and poor asset performance. Today, we're going to break down how to strategically manage capital expenditures. So, renovations, in other words, and we're going to dive into that, and how to prioritize improvements and maximize your returns when you invest in multifamily investing. John, it's great to be here with you.
So good to be here, Mark. We're now sort of getting the early days of spring here in Atlanta, so it's kind of getting a little warmer in the afternoon. My son's soccer season starting soon, volleyball starting soon. So, it's my favorite time of year when the weather warms up a little bit and the kids get busy again. So, yeah, I'm feeling good. And I know we've touched on this on previous episodes, but we're also circling a couple of deals, so
Yeah.
it's a great time. Yeah, no doubt.
When
Sun
does
shining.
when does spring hit in Atlanta? So Naples, it's always warm
Yeah, yeah,
down there,
yeah.
right? So
So typically, it's funny. There's sort of this joke. We get like a first spring and then like winter's revenge, So like in other words, we probably will have another couple of cool weeks in early to mid March, But you get like this psych out where the weather gets into 60s and 70s, and it's like, oh, now it's cold again.
yeah.
But I'd say by the end of March, it's in full swing. I always can tell because it's when I have to start taking my Claritin, to keep the
Mm.
allergies at bay. I love Atlanta, but it is a city built in a forest, so a lot of different things to aggravate your allergies down here. But no, it's coming right around the corner, man. So exciting. But yeah, to your point, it's like always spring. When it's not summer, it's spring in Naples, I suppose, right?
It's interesting. Yeah, so Atlanta, I mean, just beautiful from a tree standpoint. I mean, if the listeners, if you haven't actually gone to Atlanta and gone for a visit, I mean, it's the trees are phenomenal. But when it comes to spring, it's interesting. So, yeah, as you know, John, I'm originally from just north of Toronto in Canada, and up there right now, I mean, just the amount of snow that's come down, it's unbelievable. You see photos, and it's like over somebody's head.
Yeah,
And so spring actually happens. So March is actually still like you're in the dead of winter. And
yeah,
then April it starts to lighten up a little bit. And then in May, that's when you get full blown allergies. Like I get allergies like hit me. And so that's actually
yeah,
one of the benefits of being down here during allergy season in May. But
yeah,
it's a very short summer there.
yeah.
And so you're pretty much we still have our place up there. We have a place up on the lake, so we'll go up in the summertime. But the reality is that the further south you go, I mean, just the lifestyle changes completely, and the weather has a big part of that. And so it does impact real estate to a certain degree. Like when you have these big snow blizzards, you just don't have a lot of buyers that are around, and so we have a little bit of a later spring start. And so when the weather starts to break a little bit, you start to see buyers get out a little bit more. And that's more so in the residential side, but even in the commercial space up there, and down as you get a little bit further down south, there's just I guess a little more accessibility to these properties.
Yeah. Yeah, it's interesting. So I've been in Atlanta a lot of my life. I moved around quite a bit, lived in Chicago for a few years, Charlotte for a few years, as well as Florida. And I would say for me, Atlanta's got the perfect climate because you get a little bit of the winter. You really get a little bit of each four seasons. And we might get a little bit of snow once a year, which is kind of cool for the kids, but it comes for a day or two and then goes away. So that's even better, right? You get the fun, go build a snowman, but then you're not like digging yourself out of your house just to get on the road to get to the office or whatever. But yeah, it's also where I've lived my whole life, so that's probably part of it as well. But we get warm in the summers, but it's not as hot as obviously like Naples, right? But just speaking of, I mentioned this earlier, Mark. We've got some deals that we're circling. So just for the listeners, go to fariscapitalpartners.com and go ahead and register so you can be on our priority list. So when we launch that new deal, you're the first to hear about it. We do prioritize people in our database, and in fact, where we start is really with our current investors. They get first crack, and then it's down to those that have signed up for a deal review. So you do not want to miss out. These are exceptional deals that will be delivering 20+% annual returns. And so you don't want to miss out.
Yeah, yeah, and these deals, I'm pretty excited. I got the one deal there, John. Just the upside in this property is just phenomenal, and it looks like we're going to be in a competing situation, but When it comes down to structuring the offer, we feel very confident that we can come in with, get really strong. It's not only the price, right? It's coming down to terms, and we'll probably do another whole podcast on how we structure our offers to give us the highest chance of actually getting the deal. But a lot of it comes down to doing the due diligence ahead of submitting it. And so, John, that's a really good one. Let's do that on a future, maybe in the next few weeks. We'll be doing it on how we actually structure our offers. But this property itself, it's looking really solid. I mean, again, we've talked about this in the past. Anything that shows a 3-star Google review on the property management, that's money in the bank right there.
That's right. 100%. And what we're actually going to get into now, right? Like you talked about the importance of that CapEx budget, and then your operating expenses is what we do a lot of, to your point, before we even submit the offer. So we know going in what to expect. And so we're going to get into the nuts and bolts of how we run this process. And as an investor, whether you're targeting a single family rental for your own portfolio or investing in a deal such that Faris Capital Partners offers, you want to make sure to vet this process. And so this process applies to any investment you may be doing, whether it's once again a personal investment or investing with others. And it's critical you get this stuff right, because not every dollar you spend on maintaining a property adds value, right? And so you got to make sure you get this right. And I would say it's why we have in-house construction management. It was one of the first things you and I talked about, right? It's like what gives us that competitive edge and allows us to make the strongest possible offer. It's knowing before we even go under contract exactly what to expect, right? And so that's what we're going to talk about today.
Yeah, it happens quick when the offer, when the properties come up, and you got to be able to make decisions fast, especially these off-market deals. That's how we got that Charleston deal. It was a phone call. I believe it was on a Friday. We flew out on a Monday, and then we had the deal wrapped up by Tuesday. I mean,
That's right.
those are, they don't happen like that every day, but when they do come up, I mean, having somebody in-house that you can make a phone call and say, hey, listen, can you fly over to Charleston
Yeah.
and do a through with us? That's all the difference in the world, right?
100% gives us that edge, and that's what it takes, right? I mean, it comes down to sometimes a few dollars, but really what it comes down to is terms. And so we can put our best foot forward when we know what to expect. So, getting CapEx correct is critical, and there's no other way to put it. If you get it wrong, your investment will more than likely fail. And understanding that difference between CapEx and OpEx, right? So CapEx is where you're actually making upgrades or replacing things within the property that will add value to the property. And that could be everything from renovating a unit to more modern tastes and standards. It could be adding to the amenities. And so it's really important that you understand what is going on in the market and what people want in that market. What is the tenant or resident sentiment, in other words. And so that's part of our process that we've talked about as well, touring those rent comps and really getting a pulse on what the competition looks like. It could also look like some of the things that don't necessarily add value but have to happen: roofs, HVAC systems, right? So, Mark, when we're looking at deals in Florida, for example, we just kind of go ahead and assume we're going to have to replace some compressors, right? When you have 105, 110-degree weather and residents crank down the AC, those systems sometimes fail. And then you get into the operating expenses, which could be your property management fees. It could be obviously landscaping, just general maintenance. And you have to do that stuff too, but it is definitely not adding value. So managing those expenses is what we're going to get into today. So talking CapEx, topping OpEx, and so excited to dive in.
So so CapEx is capital expenditures, just to break that down. And so, John, you had said it. It's the major upgrades in the property. So it's very different than operating expenses. So operating expenses are general maintenance that you do alone. And so how you report it at the end of the year is really important. So you got to know the differences between the two. But going into these larger ticket items, this is where, as you mentioned, John, having that in-house manager or GC that can actually come in that knows it is really important, because at the end of the day, when we do get 3 quotes from everyone, but the GC, if you are on talking terms, they'll be able to come in and really narrow it down to a very close number as to what these capital expenditures are, and then you can budget accordingly as well.
That's right. And once again, budgeting appropriately is such an important piece here, because if you say, for example, underestimate how much you're going to need. And then you're deep into the project, say year two of a 5 year hold, and now you have a cash crunch, right? And so you have to start making decisions, which often aren't good decisions because you're having to make cuts or changes to your business plan. So for us, what we do just to be extra conservative is we add a 10% contingency budget over our already conservative CapEx budget. So we just look at what we think it's going to cost, which is once again already on the conservative side, and we just add an additional 10% just to have in the bank to keep us warm at night for that rainy day, should it ever come. And obviously, right now, there's some changes going on in the world. There's talks of tariffs and inflation and things like that. So it's really critical that not only do you have a really good budget, but a little bit of reserves just because you just never know. All of a sudden, there's a issue with materials coming across from China or somewhere, and we have to spend a little bit more money. So that cash crunch could kill a good deal, right? Just because if you don't get that right. Another factor too that you have to also consider is, you know, are you doing appropriate upgrades and renovations and maybe additions to the amenities that actually are desired and wanted by the residents? And so I think about this as a good example where I've toured some assets that are in suburban markets, have large square footage units, and they're building out like a co-working space in the business center, or the I should say the leasing center, kind of creating a business little space. And you always walk in and they're empty. Now, in an urban environment where you have smaller square footage, an amenity like that may make sense. But that's a great example of sort of overspending on low return on investment CapEx. So, it's not about just spending more money. It's about spending money the right ways on the right things that add that value and that residents are really looking for. So, it's not about just, okay, how much is it going to cost? It's like, what should we actually do? And where should we spend our money and our time to maximize that return on investment on those dollars spent?
Yeah, for sure. And so when you're making that assessment, just know who your tenant base is or your resident base. And so if it's a class A, you know that you're going to be spending more money on the upgrades, right? And when it comes down to maybe it's a class C property, it's like just the basics are fine.
Hmm.
And so that's where we like the B class space. And so for us, the amenities that are there in general, we want to upgrade them, but not overdo it. So like putting a pergola in is something that we've done in the past, barbecue station, something, and then just doing like the overall, we'll say, pool upgrades in around the surrounding area is something that is a very good investment because the tenant base that we've seen, they're actually using it, and it just gives an overall really great visual. Now, when it comes down to, say, the roofs, for example, that is something that if it's even halfway through, we want to make sure that we're going to be budgeting that in because, especially if you have an asset in, say, Florida, the wear and tear might be a little bit more. So you want to just factor that in to your CapEx or capital expenditures. You want to factor that in up front. And so the last thing that you want to do is get halfway through the hold period, or maybe you have to go, right to the end and the roofs are shot and you realize, oh my goodness, trying to sell this asset with worn down roofs like this is going to be a real challenge. And if you didn't budget for it up front and you got to go back to your investors after, you kind of got mud on your face there, right? You looking long term as in what may or could potentially come up, and having a budget and just having the funds sitting there ahead of time is something that you will be very thankful down the road, if something like that ever comes up.
Oh gosh, I mean, just think about it. When you're buying a 100+ unit, apartment complex, there's sometimes 12 or 13 buildings, each with their own roof,
Yeah.
right? And so we're talking millions of dollars potentially, or close to $1 million for a 100+ unit building. 200 plus, the number just keeps growing. Now, certainly there's mid rises where maybe there's four or five, so less roof, but more units jammed in. But in general, it could be close to $1 million just on a 100 unit building complex to update those roofs. So if that's not properly budgeted for, that's money going out the door you'll never see a dollar back on. And so, really, when you're talking about that budgeting process, you have to plan for success. And, how I kind of think about it is, early on, really on our first deal, we had a property condition assessment in from the prior owner, and it looked really good. But we spent a few dollars and still had the plumbing line scoped and camera just to ensure there were no issues that we weren't anticipating or expecting. We had the roofs fully inspected, right? So, I've heard it said you really can't save your way to prosperity, right? I mean, saving is critical to wealth building, of course, but if you just stick your money in a savings account and expect yourself to be wealthy, you won't, right? You have to invest that money, right? And so for us, what that looks like is spending a little more money on the front end, having
Mhm.
third party contractors coming, doing thorough assessments, because we'd rather spend $10,000 $15,000 running a due diligence process and kill the deal than find out 2 years in that we missed something critical. And we can get into insurance and all these other factors and other things you have to be considering, but let's just keep it focused on CapEx. It's really just getting it right from the beginning. And once again, always planning for those worst case scenarios, right? So knowing in Florida, you might have brand new roofs, or maybe the roofs are 5 or 10 years old, but there's a lot of bad weather down there. So there still could be damage that could occur, right? So just ensuring that you're cutting back trimming back the branches that are overhanging on top of the roof that could fall down and cause damage. These are all things you have to be clocking as you're doing your due diligence, Mark. I mean, literally, when we're doing due diligence, we're all leading like, oh, we're going to have to trim that tree back. We're going to have to cut that branch back. And it's all part of this process. And guess what? That costs money. So you have to budget that in, right? So, it's not uncommon for us to spend 2 3 full days on a property doing due diligence because we're walking every single unit, we're inspecting every single facet of the building, and that does cost money. So as an investor, once again, if you're considering buying a single family rental as an example, have that home inspection done, but it's worth talking to a roofing contractor, talking to a plumbing contractor, spending a little bit of extra money today versus finding out later you missed something critical.
Yeah, and another thing that's really important that I like, there's a lot of operators that they might save for the capex, but then they don't execute on it, and so they wait like a year into it where they know it needs to be done, they just don't get around to doing it. If you can invest and get it done up front, it sure lets the residents know that there's a new sheriff in town, and you are different than the previous owners. And so there's a lot of owners that'll just wait for their HVACs to break down. And now that residents don't have any air conditioning, right?
Yeah.
But if you see that some are on their last, they're going to go, just investing up front, like within the first 28 days, the first 30 days, that first month, if you go in and start replacing and get ahead of that, and then tell the residents what you're doing, man, like you might as well just get the value. You know you're going to do it anyways, rather
Right.
than just kind of waiting. And so in some cases that could work if you have a really good maintenance, but tech, and they can move quickly on that. But if you're going to invest and it's right on their end, the end of their life, you might as well just go in, spend the money, and then get the credit for it and do it very fast.
Yeah.
And so we've seen this on our 28-day transformation plan, John, where we go in and we do like the full update. And so it's not like we're going to get around to doing that. It's like we're going to go move quick. And the residents, like they're like, oh, their heads are spinning. Oh my goodness, this is great. And then when the lifts start coming in regards to the rent increases, they see where their rent's going. They see where that increase is going. And so that is such a powerful idea. It's different, I think, than majority of the operators out there. But I know residents sure appreciate it, and you end up getting the value back in the long run.
100%. So that example you just gave of the HVAC system. So as an operator, what you should be thinking about is what is the consequence of not taking care of that before it becomes an issue? And what that probably looks like is now you've really created a bad resident experience. And if you've ever spent any time in Florida or really anywhere in the southeastern United States, 1 or 2 days without HVAC is like a nightmare.
Yeah.
We're spoiled, right? I mean,
Yeah.
especially down in the U.S. I don't. In Canada, I know it's colder up there, but people like their AC nice and cold. And so you take that away, and then guess what? 3 months later, you're talking to them about a renewal, and you're proposing
Yeah.
an increase in their rent. They're going to tell you to take a hike, and they're going to go find somewhere else, right? And so now you have a down unit, a month or two without income. You're trying trying to bring a new resident in. Where if you had just taken care of that proactively, and to your point, they felt that value, they're just going to say yes to that increase because they know you're looking after them. And so it's short term thinking, and these are longer term deals. Yes, we have a 5-year plan here, and we want to exit within that 5 years, but 5 years is a long time, and so you have got to have that plan and stick with that plan. Another example, sort of related to what you touched on, is actually George, our senior VP of asset management, had prior worked with another group, and they took down the deal. And to your point, just like you described, they just didn't do the work right away. But guess what? There was some tailwinds. They were getting rent increases without doing the renovation work. And so, well, why do it, right? We're winning. We're not spending any money yet. We're getting these rental increases. Well, what happened is a year or two later, new deliveries started hitting the market that were offering a superior product. And then all of a sudden, they started having negative lease trade out, and it was eating into their capital reserves. And now all of a sudden, they didn't have the money to do the work that they had promised, not only themselves, but their investors, their residents, that they would do. And so it ended up taking what could have been a really great deal and handicapping it. But just having spent that money on the front end, they would have been well positioned to compete better with that new inventory that did eventually come online.
Mm,
So it just goes back to, you don't always know what's going to happen in 2 or 3
that's
years or
right.
1 or 2 years, right? And what kind of disruption may come into the market. And so, when you have a plan, believing your plan and sticking with the plan. And I think you nailed it. That first 30 days, if you can make a really great impression in those first 30 days. We saw a great review from a gentleman named Ron at Faris Residences Largo, who's been there for 11 years. And he's like, I finally feel like the property manager cares about who I am and what we're doing. Now, a lot of that's the two wonderful women that work in that leasing center, Corey and Martha. But I suspect a lot of it also has to do that they've seen the improvements that we promised, and it happened fast and quick. And their living arrangement became much more better for them for that work that we've done. So once again, we're getting $200, $300 above pro forma on rents. We would not be accomplishing that had we just sat on that money and not deployed it.
Yeah, right on. And so, talking about a specific example when it comes down to doing the renovations of the unit. So, generally for us, it takes about 2 years to go through the interior unit renovations. And so, how we do it is when there's a renewal coming up, we give them the option to either pay a premium for that same unit. And in a lot of cases, we're actually getting the renovated performa projection number when it comes to the rental increase. And in some cases not, we still get the renewal, but we'll give them that option, and or they'll flip over to a premium unit, and so they'll pay that premium amount, or they'll just say, you know what, this is no longer the community for me, and they'll transition out. And generally what happens is we'll do 5 to 10 units a month. And so we'll start renovating those units, and we do that over a period of 2 years. The beauty of that is the remaining tenant base or the resident base, they're paying monthly cat or rental. And so there's monthly cash flow that spits out to our investors. So our investors are getting the 5-6% distributions on an annual basis. And we pay that out monthly. And then what happens at the end of the 2 years, the units are all renovated and we've gone through our business plan. So the beauty of that is we cash flow the property while we're flipping the property. And so the benefit of doing it over a period of 2 years is you do not risk going below your debt service coverage ratio. And we saw this in one operator specifically. They went into power of sale. They came in and they actually leased down, I think, John, they went down like 55% occupancy.
Well, so that's when the lender knocked on the door and said, "You guys are in trouble." So they got even lower than that. Yeah, so they tried to do it all at once like a blitz, and that is not the right approach. I asked George and Joe, Joe's our senior VP of acquisitions. I mentioned George before. I was like, "Is there any logical reason somebody would choose to do this?" And they said, "No, it's just amateurs. They didn't understand how this stuff works." And so you're nailing it, right? It's like we got to keep the occupancy up while renovating the units because we need that cash flow still coming in. So we never throw anybody out of their apartment. It's always when, hey, do you want to upgrade? Or, sometimes life changes, new job, new whatever, something changed in their situation. They just need different accommodations. So only then do we renovate. And that's why it takes that 2 years, right? It's a more a patient, methodical approach to keep that cash flow coming in. And to your point, Mark, too, as that cash flow comes in, it's not that we need to pull into that for the capex, right? Like we have raised the capital to do that on the front end, but it feels a lot better when you see the increase in income coming as you continue to renovate. So just make sure it's proving to you you're doing the right things, because ultimately plans are really critical to business success, but you also have to be willing to potentially change the plan a little bit if new information emerges. So maybe I'll use Charleston as an example, and this is actually where we decided to add a few additional things. But we're renovating these units, they're delivering, everybody loves them, we're renting them at great rents above our pro forma. But we just took down that new deal, Strawberry Station, and we decided to put a chandelier in the eating area, the little breakfast room, and we just liked it so much, we're like, well, gosh, let's add that to that. The other two properties we have in Charleston, maybe that'll be a little bit of an extra sizzle factor that'll help us even lease these more quickly. So there's a case where we added something, but there might be a case where we say, you know what, we've been replacing the cabinets, and guess what, maybe we can paint them, so we're actually reducing our capex. So we're never really overall changing the business plan, but we have to be smart and make intelligent decisions as we go. And sometimes information emerges, maybe we just don't need to spend that money, and we can actually save that money and preserve some of our investors capital and the business's capital there. So it's critical you're not just setting and forgetting the plan, right? You have to engage with the plan on a daily, weekly, monthly basis.
Yeah, right on. And now, when you are going forward with the CapEx renovations, so you want to make sure to get three bids. And so we do have an in-house general contractor that basically is working for us, that goes in and they actually will either do some of the work himself along with hiring local trades. And so by getting three quotes, that's just ensures that we know where the numbers are coming in at. And we don't always necessarily go with the lowest bid. And so that can sometimes be a red flag. And so for us, and John, this is something that we've gone through this before, where the trade actually started, and maybe they started, the quality was fine, but then our GC was on them, and then we realized some of the quality was starting to turn a little bit. And so we had to transition to a new trade. Now, having somebody boots on the ground, that, like, we don't miss a step, right?
Yeah.
Because we can get somebody in very quickly and he knows how to deal with them. But that is something, watching out who you hire from a contractor and trade standpoint. That was that same operations group there, John, that went in after that property, and they leased it down. But one of their biggest challenges, when they leased it down to like very low occupancy,
Yeah.
they had we'll say, a challenging situation with the contractor, where the contractor just said, hey, listen, I'm not working anymore. And they had this conflict and things stopped, and it was a really bad situation that operating team got into, just because they didn't think ahead.
Well, and they pre-purchased all the material and warehoused it too. So now they're paying all this cost to have a big warehouse full of materials. Then they get in this contract dispute with their contractor, where we actually create a kit, is what we call it. So basically, every unit has a renovation kit, and so they come on like pallets. And so we get 5 or 6 in advance. So they're kind of in a storage facility on the property. So it's not like we have to go rent some warehouse space somewhere. And then as we renovate a unit, we just order a replacement kit. So we'll always have a few on standby should there be any sort of supply chain disruptions. But we're not pre-purchasing 104 units, to use Largo as an example, and just letting them sit in a warehouse for 2 years. We're ordering them as needed. So once again, if some sort of black swan event occurred, pandemic is a great example. Now, all the states we buy properties in are landlord friendly, but during the pandemic, there was some federal laws, and then even on the local level, where residents could get a waiver on paying their rent for a period of time. And so if something like that were to happen, we could pump the brakes on renovations, allow the market to correct, and then start that program back up when ready. So, there's a lot of nuance in this, right? It's having the right plan, but then the execution becomes a critical component as well.
Yeah. And then, so another thing that we do is, we measure what that payback period is in regards to the cost for it. And then in a lot of cases, what's the time frame that we're going to get a return on the cost. So for the renovation, for example, if it takes us, we'll say, we're able to spend $13,000 to $14,000 on a reno, how long will that actually take with the increase in rent to actually pay that back? And so we actually look at that as a percentage as to what's that payback time, and is that a good investment to be able to get that payback time. Now we do get the upside in regards to the lift. For every dollar we increase the net operating income per month, it increases the overall value of the building by about $240 based on a 5 cap. So there's that side of it that we measure, but we also measure what is the return on investment for the CapEx expenditures.
That's right. And then you now get into the actual approach, right? Like, what are we going to do to these units or to this building to add that value? And so, you want to make sure you're avoiding over improving it. I sort of touched on that earlier, but adding amenities that nobody wants or over improving the unit beyond what is necessary. And so for us, our residents come first. We've touched on that on previous podcasts. We know if we focus on an exceptional resident experience, then the investors will be well looked after, because it's all about those rental increases and keeping residents in the property longer, because that's how we really win. And so as part of our process, when we're touring rent comps, we're looking at through the lens of what a residence would see, right? So we want to see, if they're getting $1,700 a month in rent, what are they offering? And if we want to get $1,800 in rent, what are we going to need to offer so that we can position ourselves as a better option and worth that additional $100 in rent? So it's not only just going in and saying, oh, we need to copy what they're doing. It's also using a little foresight into saying, okay, well, what can we do that's missing in this market, right? So that Peachtree Corners deal is a great example where there's a lot of existing inventory from the 80s and 90s. It's a well-developed area of Atlanta that's largely been developed. It's kind of an infill market. And so the new supply that's coming in are largely in kind of unusual places. Like, for example, one sort of sits behind a gas station. And so it's a nice property, but, looking at that and saying, okay, as a resident, if we're making a decision here on where I'm going to spend my hard-earned money to lay my head at the end of the night, what do I really want? What do I need? And so making sure you're not over improving or certainly under improving, right? Because that knife cuts both directions. Maybe you come in and do a cheap renovation. And, it's interesting. What I've noticed with residents and in residential real estate with buyers is people can't always put their finger on it, but they can tell when something's cheap. It's like they don't sit there and go, oh, this looks cheap. They say, I don't like it. And it's like, well, you can tell because they cut corners. It's, you mentioned that contractor we had some issues with. The bottom line is they were delivering quality stuff, but it was just the details. And so, for example, there was one example where I was actually in the living room and I kind of squatted down a little bit as if I was sitting on a couch. And when I looked into the kitchen, I could see where the tile met the cabinet. It just looked like crap. And I'm like, you may not see that when you're in the kitchen cooking, and you're probably not going to look like this, but when you're in the living room, it's all you see. And so they come in and fix it, but we don't want to be chasing contractors around, making sure they do it the right way, right? So, it's finding the right contractors, finding the right renovation program that will maximize your rents without causing you to overspend. So you got to get that right. So studying those comparables is a critical component, but then having your own experience, making sure you're making the right decisions.
Right on. So just to go over a few of the mistakes, and we've talked about a number of these when it comes to doing your CapEx. Number one is not having a reserve fund, so not saving a little extra. The next one is focusing too much on aesthetics and not focusing on what the return on investment is. So that happens sometimes. It's you're thinking, oh man, I'd really like to have this. And you're thinking yourself personally versus, am I going to get a return on investment on that? That's really important. Hiring the wrong contractors. We talked about this. If you get the wrong contractors and just poor workmanship, it's in the details. And so, John, you nailed it. Residents, they'll come in, they'll say, it just doesn't match, but it's in the detail. That's one of the reasons why they don't like it. Right. It looks cheap. And, if they like quality things, that's the kind of resident you want. And so you want to cater to a resident that has high standards in where they're living, because they're likely going to maintain your property a whole lot more. The next is underestimating timelines. So this is a big one we'll just say you think it's going to take less time than expected, and you budget for that. And so you want to make sure to have hope for the best, but plan for the worst. And so you never want to put yourself behind the 8 ball when that comes. And so by having people that you've worked with, GC and trades that you've worked with that have hit deadlines before, well, that sure does make things a whole lot better when it comes down to, especially when you're doing hundreds of units. It's one thing for one unit, but when you're doing hundreds of units, you got to get your timelines right and your plan right.
That's correct. That's right. So yeah, just to wrap it up, right? You got to get this right. So proper capex planning is critical, and looking ahead to see how it impacts cash flow as well as your, kind of future property value, right? And understanding that these deals trade based on the income approach. It's will the renovations we do and will the improvements we make add to that cash and that cash flow, because as we increase that net operating income, we are increasing the value of the building. Making sure we're only doing those high return on investment upgrades, kitchens, even things we didn't really touch on, but energy efficient, stuff, right? So maybe we put in low flow toilets or low flow fixtures, and obviously appliances that meet energy efficiency ratings, and that helps to lower your operating expenses. And then staggering those renovations and tracking the performance as those renovations occur, so you can make any adjustments if necessary to your plan. Not locking into a plan, blindly, knowing that that plan may need to change depending on the factual information that comes back from those residents. In other words, are they willing to pay the rents you thought they would pay based on the work you did? So those are those three key insights that you have got to get right, whether you're buying that single family rental or investing in a large apartment complex.
Yeah, well said, John. I think the listeners that would have gone through this, you have a really good understanding what capex and some of the pitfalls and things to watch out for when you're executing on your plan. If you are interested in investing, we are getting closer. I know, John, we talked about this potential property coming up in Atlanta. There's actually two we're looking at right now. We're getting very close to securing our next deal, where these deals are shooting out 20% annual returns and like 5 to 6% cash flow, cash on cash returns. And so very strong deals. We believe we're bottoming out in the market right now is what the data is telling us. And so this is the time to invest in real estate. And so if you're interested in learning more, go to Faris Capital Partners. That's Faris capitalpartners.com, and click on the reservation button there, and get on our list to be informed when our next deal comes out. Appreciate you guys, and thanks for listening. If you enjoyed the show, go ahead and subscribe and share with other high net worth investors that you think will benefit from it. Thanks for tuning in to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.